Greetings and welcome to today's multifamily investing overview. My name is Ray Hightower with ROIClear, and we are grateful that you are taking the time to view this presentation today. Now, our audience is rather broad in range. Some of you have achieved success in other professions outside of the real estate industry. You are captains of industry in your professions. Others of you are very deep in the multifamily industry. So this presentation is geared to that broad audience. And in the future, we will release other presentations that focus on one niche or the other or another, or one specific area or another of multifamily. But for now, we're going to give you a general overview of our approach to multifamily, and let's dive right in. A little bit about me. My name is Ray Hightower. I started and ran a technology company for over 2 decades, and after 21 years, I sold that company. I'm now in the multifamily space. I've got over 570 doors. That's a combination GP and LP investments, and I'm primarily in the state of Arizona. Our agenda for today is as follows. We're going to go through partnerships, our syndication structure. We'll talk about acquisitions, our acquisition process, how we go about capital raising, and finally, asset management. So let's dive into partnerships. We believe very much in partnerships, and here is a photo of myself along with two of my key partners, Adrian Diaz and Colby Fryer. These two are amazing. Adrian Diaz has closed over 2,000 doors in the state of Arizona, and he is now in multifamily. He made a name for himself in the single family space, did extremely well, retired from that after closing 2,000 deals, and we're grateful to have him on the team. Colby Fryer has spent 25 years as a structural and civil engineer, and that expertise is very valuable when it comes to asset management. He can look at a problem, apply his engineering background to that problem, and make that problem go away, solve that problem. And certainly, if we do a call together, I can tell you some stories about both Adrian and Colby and just the great things they've done. And I've introduced myself earlier. I'm Ray Hightower. Now, our syndications are structured. I like to use the metaphor of an airplane. If you think of a syndication as an airplane, everyone on the plane is going to get to the same destination at the same time. However, at the front of the plane, you have the people who are flying the plane, who are controlling the plane and making sure that it's fueled up and that it is flown safely. In the back of the plane or in the passenger area, you have the passengers or the limited partners. The general partners are in the front of the plane. The limited partners are in the passenger section of the plane. Limited partners don't fly the plane. They're there to see their money get on board, to see themselves get on board of the plane and see their money be stewarded properly so that it delivers a return on investment for them. And then my team, we as general partners, we're responsible for making sure that the plane takes off and lands safely, and that when we hit storms, every investment does hit storms. When we hit storms, we figure out how to navigate around the storm, go through it, or do whatever it is we need to do to make sure we get that plane safely to its destination, which is delivering a return on investment for you, the investor. So let's talk about acquisitions. How do we buy these properties that we acquire? How do we buy these properties that your money will be invested in? Well, sometimes we do off-market deals, sometimes we do on-market deals, but the bottom line is every deal we do is driven by our relationships with brokers, with sellers, and with professionals in the marketplace. We also use tools like Reonomy to gather data about properties all over any marketplace we may be targeting. We are very conservative with our underwriting. And I'll back up for a second. Why don't I give you a definition for underwriting? Different people, different syndicators, different investors, different title company officers, different lenders may give you a different definition for underwriting. This is one that works for me. I like to think of underwriting as a process that answers one primary question, and that is, how do I take this piece of real estate and turn it into a business that makes money? How do I take this piece of real estate and turn it into a business that makes money? So, in the process of underwriting, we are doing budgeting, we are doing business planning, we are predicting the future. In our budgeting, we're figuring out what's going to happen with taxes over the next few years, what's happening with insurance, how much do we expect to pay for utilities and for contractors, people who are mowing the lawn or shoveling the snow. We don't shovel snow in Arizona, at least not in Phoenix or Tucson. But you get the point. We want to make sure that we take into account all of the potential expenses, and we also take a very close look at where the potential income will be. Where are the rents right now? How high will we be able to raise the rents when we make improvements to the property? Because I got to tell you, when we improve that property, we don't do that for free. If we are delivering a better product to the marketplace, as we do, we expect to get paid for it. And by we, I mean the GPs and the LPs, those who are investing with us, and ourselves as well. And predicting the future, very, very difficult to predict the future unless you do as Alan Kay said. Alan Kay is a technology leader. Alan Kay once said that the best way to predict the future is to invent it. So we try to drive the future as best we can by knowing as much as we can about the market. We try to drive the future as best we can by knowing as much as we can about the market and knowing as much as we can about potential rents and everything that will generate income for the property. If you are interested into diving into the details of underwriting, I would encourage you to read these two books. One is The Definitive Guide to Underwriting Multifamily Acquisitions. That's by Rob Beardsley. Or you can take a look at Financial Freedom with Real Estate Investing by Michael Blanc. Both are great books, and both authors have produced underwriting models that are very popular in our community. So how long does it take to underwrite a deal? That's almost like asking, how long does it take to cook dinner? It depends on how elaborate you want to get. When we are looking at deals, the first time we look at a deal, if we're making a decision about whether or not we want to dive deeper or not, the underwriting process, that can be just a matter of minutes because we know the areas that we target very well. So we have an idea of where the rents are. We know what's happening with taxes in the state of Arizona. There are certain things that happen in Arizona that you won't see in other states here in the USA. So there are certain things that we know because we review so many deals in this market that we've become very intimate with the market. So we can underwrite some deals. Let me put it this way. We can say no very quickly. Sometimes we can say no in a matter of 5 or 10 minutes or less. That's what we can do. But when we're very interested in a deal, it can take hours because once the deal starts to pass muster, once it's gone through a few of our filters, we might say, let's take a look at this more closely. What would happen if something different happened with regard to rents? Or what if something changed with regard to occupancy? We stress test the deals while we are still looking at them in our underwriting models, while we are still looking at them in our spreadsheets, so that we have a very good idea of how the deal will perform before we acquire it. And that's all part of the underwriting process. And I'm absolutely glad to get into that in deeper detail. If you want to schedule a call, we can dig further into that. Now let's talk about capital raising. Capital raising is, raising capital. We are raising capital that we will use for the down payment and for the capital expenditures on the property. And capital raising is easy. Well, no, actually, no, capital raising is not easy. Capital raising takes a lot of work. Capital raising involves building relationships with people. Really, it's about relationships and ROI is the way I like to look at it. Relationships. People need to know based on your track record, based on our track record as operators, that they can trust us. And they're looking at what we've done with properties in the past, what we've done in other businesses we've run in the past, and evaluating us and evaluating the deal and making a decision about whether they want to invest in the deal. And then, of course, they're looking at the potential returns that the deal may generate. So we, of course, we can share underwriting models. We can share summaries of underwriting models. We can share financials. We can really help our investors to drill down into a deal to help them to decide whether that deal is a good fit for them. So, capital raising, in our experience, is driven by relationships and ROI. Now, let's talk about the ROI. We go through extensive underwriting before we acquire a property, and we're happy to share the underwriting with those investors who are interested in diving into that level of detail. We also share summaries of our underwriting, showing people what the cash-on-cash return is projected to be, what type of return on investment we're expecting, what we expect in terms of IRR, or equity multiple. We're glad to dig into that with our investors at whatever level they want to dig to. In addition, we run the AZMM, the Arizona Multifamily Mastermind Group. You can find more about us at azmm.org. This is a special mastermind for our fellow syndicators, for our fellow operators of multifamily properties, and it's one of the places where we share ideas with each other and where we grow together, and it's one of our ways to give back to the industry that has given so much to us. We have a blog at rayhightower.com, and in this blog, we review books. In this particular screenshot, you see a book review of The Gap and the Gain by Sullivan and Hardy. We discuss business concepts. We sometimes summarize the work that we've done on the ROIClear podcast. It's a great blog. I'm a little bit biased because it has my name on it, the rayhightower.com blog, but go ahead, take a visit, and let me know what you think, and feel free to reach out. And if you have ideas on things we might cover, let me know, and that might be something that we pursue. Now we get to asset management. Asset management is about making sure we execute the business plan. As asset managers, we are responsible for hiring the property management company, giving them a clear vision for what it is we want to accomplish, and managing the business plan. Job one for the asset manager is to execute the business plan. And remember, early on, several slides back, we talked about that. How do we take this piece of real estate and turn it into a business that makes money? Asset management is the way we drive that. The underwriting tells us that the potential to drive that business plan exists, and asset management is the active execution of that plan. And we use a variety of tools. Some of you may be familiar with Yardi. Of course, you're familiar with spreadsheets, and Basecamp is a tool that we use for project management. We use a variety of software tools, but mostly the most important tool we use is our ability to interact with other people, is the relationships we build with our property management companies, the relationships we build with the individuals at our property management companies, the relationships we build with contractors, electrical contractors, plumbing contractors, people who do roofing, people who are responsible for the solar panels on our property in Tucson. There are a variety of relationships that we make sure that we nurture and build so that we ensure that we deliver results for you, our investors. So that's a screenshot from Basecamp. That's our project management tool, and our philosophy on how we work with other partners, or how we work with contractors, or how we work with professionals or vendors or employees or anyone. A lot of that is driven by this book, Who Not How. I'm not going to spoil it for you. Go to rayhightower.com, read the one-page description of Who Not How. You'll get the gist, and I would encourage you to buy the book and read the book too, because it's a great book about building relationships where everybody wins. So that's it for today. Thank you for listening. If you would like to know more, subscribe to the ROIClear podcast. You can find that on YouTube, or just go to ROIClear.com. There's a link to YouTube where you can subscribe to that, either on YouTube or on Apple Podcasts, or you can enroll in our you can become a member in our investor portal. That way you'll get alerts about future deals, and reach out to me anytime. I love to talk about this stuff. I love to talk about multifamily investing, and I wish you well, and I thank you for your time.